Yeah, please, I want to ask, one is that what time frame is best for a beginner to start trading?
The best time frame to use. So let me remove everything on this chart. If I was a beginner, this is the way I would simplify this. I'll keep this as simple as possible. What I'll do is I'll come to any asset that I want to trade, whether it's euro or whether it's gold, no matter what asset it is, what I'll do is, first of all, I would ask myself, what is the trend? Where is this market going? Is it bullish? Is it bullish? Is it bearish? If I'm looking at it right here and I'm seeing that this is bullish, I'm looking at this weekly. Weekly is bullish. Now, looking at this on the monthly, you can see that the swing lows, this is swing low, this is swing high, it is bullish, but the lower highs and the lower lows is bearish. Now, for a beginner, this is going to be confusing. This is going to be very confusing for a beginner because now you're wondering whether we're bearish or whether we're bullish. First thing I'm trying to help you do is to choose a pair to trade. So what you do is look for a pair that even if someone just wakes you from sleeping right now and ask you, is this pair bullish or bearish? And you just give them a straight answer without thinking about it. That is the first thing you need to do. Look for such a pair. And there are so many pairs like that. Example is gold. Gold is like that. If you wake anybody up, even someone that has never traded before, and ask them, is gold bullish or bearish? They'll tell you gold is bullish. The same thing, if you wake someone up and ask them, is NASDAQ bullish or bearish? This is NASDAQ. They'll tell you, oh, NAS is bullish. S&P, is it bullish or bearish? Bullish. Now, choose one or two of these pairs. I would recommend you choose two of them, mark them out every week, wait at a higher time frame point of interest, wait for your break, and look for a buy. Stick to doing it this way. If I was a beginner right now, with what I know about trading, trying to be jumping from USD card, euro, this, that is going to confuse you. The best thing is stick to trading just one or two pairs that you're seeing that they are trending up or they are trending down. Once you see they are trending up or down, next thing you now do is you ask yourself, where is the higher time frame points of interest that these pairs can come to? Imbalance. Go from monthly imbalance, weekly imbalance, daily imbalance, 4-hour imbalance. Your job now is to mark them out. Right here, this is monthly imbalance. And this is another monthly imbalance. Monthly imbalance. You mark them out, and I think there's a very small imbalance here as well. I'll zoom that in so we can confirm. Yep, there's a very small imbalance there. You mark them out as well. Then here there's an imbalance here, I think, but it's been filled. Let's see 3 months. So you can see that on 3 months, there's no imbalance here. Let's go to 1 week. Now on the weekly, on the monthly, you've marked out, you can see that we've marked out the imbalance you can see on this leg up. Because if we're going to see a retest, it's going to happen inside one of these levels. You've marked it out on monthly. The next thing you go to weekly. On the weekly, you're doing the same thing. Make sure you label those imbalances because if you don't label them, it's going to be very confusing for you. Example, you label this monthly fair value gap. Now you're looking at this monthly fair value gap. You're also seeing that there's a weekly imbalance here. You mark that out, you make it a different color. And then you look down and see if there's anyone. And this one here, there's a weekly imbalance there as well. And there's a weekly imbalance here too. Now, you do not know which of these imbalances that price is going to use. All you know is one of them is going to be an area of support before a continuation to the upside because the trend is up. Now, you've marked this. Your job now is to wait for one of these key levels to get retested. And you count 3 time frames to the left once it gets retested. Simple. If price taps this zone, 1, 2, 3, wait for 1 hour BOS. Now, but before we do that, go to daily and see if there's any imbalance at those same positions. And right here, there's no imbalance here. So to keep it simple, we just want to see weekly mitigation, price tapping this on the weekly imbalance and breaking 1 hour structure. We go straight down to 1 hour time frame. And right here, this is 1 hour. And look what happened right there inside that imbalance. came down, created a high, created a low, broke structure here, retested. This high will be your entry. That retest is your entry right here. Your stop loss will be this low. Add a few extra pips below. Now, because you're a beginner, I'll give you an exit model to use. Go back to that weekly. Ask yourself, if we tap into this position, where will be the next area that price could potentially reverse from? Go to weekly, look for weekly imbalance. Just keep it as simple as possible. Weekly imbalance. Can you see any weekly imbalance here? No. Go to daily. Look for the same thing. Can you see any daily imbalance here? Yes, there's a daily imbalance. Mark that daily imbalance. Do the same thing on the 4-hour time frame. Look right here. There's another daily imbalance. Mark that as well. Go to 4-hour time frame. Look for 4-hour imbalance. On the 4-hour time frame, we have this massive imbalance here. This imbalance here, what are you going to do with this imbalance? What you now do is you're going to have areas where you're going to be securing some profits. Now, if this trade is valid, I expect it to fill this imbalance. But what I'm going to do is once it gets to this extreme, to the close of this imbalance, I'll secure significant profits between 30% to 40%, minimum of 20%, 20, 30, or 40% secure profits here. And look at that. That is already a 1:2. Now, let's say you're risking $100 on this trade. Right here, you're up $200. You secure, let's say you secure 20% of that $200. That would be how much? That would be around $40. Profit secured. Now, this area will now be your second and exit position. I wouldn't recommend you hold the trade to this level. Here, once price comes to this level, you need to be out of the trade because this is a daily imbalance. Daily imbalance. Right here, close the trade. Be done with it. Once you're done with it, you're doing the same exact thing again. You're going to your higher time frame and you're looking for higher time frame imbalance. Again, right here, we have this higher time frame imbalance. Here, you mark that out. I'll make this a different color. Right here, another imbalance. You mark that out. And right here, another imbalance. You mark that out. Your job is simple. Just wait on the sidelines until price comes to your position. Tap it, count 3 time frames to the left, 30 minutes break, and you take another trade, targeting another imbalance. Right here, you can see it came to this first one, disrespected it, went lower. Before we continue, also go to 4-hour to confirm whether there's any imbalance aligning here. The reason I'm saying this is because when you are able to see an imbalance around this area, it will mean that instead of waiting for a 30 minutes break, you can now use 15 minutes break. So let's go to 4-hour and see what that looks like. Now on the 4-hour time frame, you can basically see that the imbalance on 4-hour time frame, there's not even any imbalance to work with on 4-hour time frame except this one. So that means we're sticking to daily imbalance that is here, here, and here. So price coming down in here, we just want to see 30 minutes BOS. And you go straight down to 30 minutes time frame. And right here, you have price trending to the downside, creating lower high, lower low, lower high, lower low, and then it broke structure here. This was the break of structure. And after this break of structure, now why did I use here as the break of structure? This is supposed to be the high, which is the break of structure. The reason why I'm using here is simply because this week's wicked above. We have this week that wicked above this high. This week wicked above this week's. This one rallied again, another week again. So now I want to see a break above these weeks. That's what I want to see. A break above this week's. And this is the only area I saw a break above this week's. That's why here is the area that I'll classify as the break of structure because it broke above the weeks and closed. Now, for some of you that have been in my session, I've talked about this kind of scenario where you see a break of structure and then you see an imbalance. And what did I say? Use either the close of the imbalance or the 50%. That's what I said for some of you that have been in my session. So if you watch the replay, I said it on one of the sessions as well. And right here, you can see this is the 50% of the imbalance. Let me zoom this in so you can see what that looks like. So personally, I usually recommend using the close, but sometimes price will still come to the 50%. In this case, it didn't even come to the 50%. It only came to, oh, sorry. I didn't even put this well. Yeah, but it didn't come to the 50%. It only tapped the close of that imbalance and reversed. So if you were waiting at that 50%, or if you are waiting for it to retest on this high right here, the major original high, you would have missed this trade. The trade would have left you, broke structure, retested inside the imbalance. Be very mindful of this. If you can, take a screenshot of this, put in your journal, write it in your journal. When you see a break of structure and there's a higher time frame imbalance, or even a 30-minute, 1 hour imbalance, before price will retest on the high, it's ideal to just use that imbalance as your entry, because it can stop price and reverse it to continue high. So right here would have been your entry on this trade. And you can see this would have been a rally. And this would have been another trade opportunity. And after that, what do? The same thing. You come into the market every week, you're doing the same thing, nothing different, going to 4-hour, daily, weekly, looking for imbalance. And if you're on the trade, let's say you got it on the trade from here, from down here. Let's say you got it from down here. What do? You're looking for imbalance for exit. And right here is another imbalance. This is an imbalance for an exit. This is an imbalance for an exit.